Now, I will explain about the definition, the importance, and the difference of MRTA and MLTA. MRTA, or Mortgage Reducing Term Assurance, is a sort of home loan insurance in which the amount insured decreases over the life of the loan. The value of your outstanding debt will decrease when you pay off the house loan. The importance of MRTA is it is best suited for those who have life insurance and medical insurance and do not have many financial responsibilities. It can protect a family from losing their house. This is because in the event of any unforeseen occurrence that happen to the breadwinners, such as death, involved in the accident and becoming permanently disabled and cannot work to support the family, this insurance will help to guarantee the repayment of the unpaid loan balance to the financial institution, so he does not have to worry about paying the home loan. MLTA, or Mortgage Level Term Assurance, is a type of home loan insurance in which the sum insured remains constant over the course of the policy term. This means that the borrower will pay the same amount in the 10th year as it will be paid in the 25th year. The importance of MLTA is it best for those who need additional financial protection in the event of a worst case, as it also provides a cash value at the end of the policy. MLTA will ensure that your loved ones also receive some cash payments in the event of death or total permanent disability, or TPD. They also can choose for the savings function, which collects a percentage of the premium paid as a cash surrender value. The first difference of MRTA and MLTA is the objective. The objective of MRTA is only offers a protection for a family from losing their home, while the objective of MLTA is offers not only protection for the amount of your outstanding home loan, but also functions as savings, since the amount insured will be consistent throughout the duration of the loan and can get a cash value. Next, the payout amount of MRTA is the sum insured decrease according to the term of the loan, but for MLTA, the sum insured remains the same on the basis of a fixed level sum insured. Besides, when we using the MRTA insurance, we cannot transfer the insurance if we move to another house, but for MLTA, we can transfer the insurance to other properties. Lastly, the MRTA has no cash value because it has a diminishing cash value which drops to 0 ringgit at the end of the loan period, but MLTA has fixed cash value throughout the term of the loan.
Now, let's continue about insurance coverage. The purpose of homeowner insurance is to safeguard you from financial loss caused by insurance occurrence for your house. MRTA, in the case total permanent disability or death, the issue of insurance will only cover your house debt. It is not completely repaid. In this case, your family will not get a penny from the coverage, says the bank. Not your family member is the beneficiary. So, MLTA, this is a personal plan that protects you and your dependent financially in the event that you pass away or lose capacity to earn money. The insurer also includes a financial value at the conclusion. This is the greatest option for individuals who have a lot of financial responsibilities, such as small children and your partner.
Who should take this MRTA and MLTA insurance? Firstly, For MRTA, it should be taken by someone who purchased a house for residence, while for MLTA, it should be taken for someone who purchased a house for investment or rental. Secondly, for MRTA, it can be taken by someone that intends to use the residence for a long time, and MLTA is for someone that intends to use the residence for a short-term home purchase. Thirdly, MRTA can be used by someone who do not intend to refinance, as this will cancel the policy immediately, while for MLTA is used for someone who intend to refinancing. Fourthly, MRTA is for someone that has no financial responsibilities, and MLTA is for someone who is sole breadwinner or has a financial responsibilities. Fifthly, for MRTA, it should be taken by someone that have a strong financial profile and budget, whereas for MLTA is for someone with a poor financial profile and many financial dependents. Lastly, MRTA should be taken by someone that has other insurance such as life insurance and medical insurance, while for MLTA, it is for someone who has no other insurance. Therefore, for a better understanding, I will show you a summary of what I have shared just now.
Have you ever been confused by a term MRTA and MLTA when you are getting a home mortgage for yourself? Well, in this presentation, I'm going to walk you through the difference, pros and cons of MRTA and MLTA by giving the examples of real product of both in Malaysia, which is Citibank. So, what is MRTA that provide in Citibank? In Citibank, MRTA covers the outstanding mortgage loan on a decreasing sum insured basis. It helps to settle outstanding mortgage loan with the bank. So, how about the coverage type? As the principal loan amount decrease, the sum insured also will be decreased. How about MLTA that provide in Citibank? In Citibank, MLTA covers the outstanding mortgage loan on a fixed sum insured basis. It helps to settle outstanding mortgage loan, and the balance, if any, will pay out to the beneficiary. So, the sum insured remain constant during the policy duration. You can see the differences between MRTA and MLTA from this table. What are the benefits we get if we apply MRTA or MLTA from Citibank? First, they will repay the bank for the outstanding loan in line with the sum insured schedule in the unfortunate event of the borrower's total permanent disability (TPD) or death. Second, the beneficiary will not responsible for repaying the remainder of the loan. Thus, if we fully redeem our property prior to the expiration of the contractual time, we have the option of maintaining our present coverage. That is the portable protection for us.
According to this article that written by S.R. Children of Parti Sosialis Malaysia PSM, a man named Balan was born on August 28, 1979. He married, but he already divorced his wife and left his son in her care. In 2013, Balan looked after his two sisters and their children. They have all taken up residence in Balan House in Seremban. Balan obtained 115,000 loan from the BSN to purchase the house. In this family, he was the sole breadwinner. Balan had been regular with his repayment for 12 years until his accident, but he was involved in a major industrial accident at work in 2015, which left him paralyzed from the waist down. He was confined to a wheelchair at the time and was classified as disabled. BSN alerted Balan that he had defaulted on his loan repayment for some months. BSN informed Balan that his house will be auctioned despite a pending insurance claim under the MRTA. Because BSN is one of the GLC bank, the action seems cruel. Sadly, the insurance company dismissed his sister claim as well. Then, he was released from the hospital and came to the BSN for help. Balan family later staged a protest at BSN headquarters in Kuala Lumpur, but BSN insists on proceeding with the auction despite the protests. They also sought the help of the Bank Negara, but were told they have no authority over the BSN. In fact, MRTA would have covered the entire cost and his sister might have lived in that house if Balan had died at the time. In Balan's case, BSN auctioned the house in obscenely hasty manner while Balan was still in the hospital. MRTA was supposed to cover permanent disability other than death, but have failed him, and BSN has also shown that they are not responsible. As Balan has subscribed to the MRTA, BSN should get the money from the insurance provider to settle the loan debts if the coverage is insufficient. We will state a few advantages that you will gain if you take MRTA. Firstly, MRTA protects your family from losing their home. Secondly, it's the most convenient because it's usually included as an option with the loan. Thirdly, the insurance fee is paid in one lump sum at the time of the purchase MRTA. And lastly, the MRTA is less expensive than the MLTA. Besides that, we will also state a few advantages that you will gain if you take MLTA. Firstly, on a fixed level sum assured basis, the sum cover remains the same. Secondly, at the end of the tenancy, MLTA provides a guaranteed cash value. Thirdly, MLTA transferable if you move to another home. Fourthly, MLTA pays the remaining balance of your house loan to the bank as well as a lump sum payment to your family and the loved ones. And lastly, the beneficiary will not be responsible for paying off the outstanding loan balance. To conclude, MRTA and MLTA is very important because this insurance will guarantee your loved ones be able to pay off the mortgage in full regardless of what's happened.